All right, so today is January the 13th, 2023, and I'm breaking down this ES trade right here. So I think we're about to have a pretty nice sell-off off of these highs right here now that we got our confirmation, okay? So we'll see if we can give a little retracement back up into this area. But what made me come to this conclusion, because right now I'm on the 1 minute chart. So our lower time frame chart, we just got that confirmation. It looks like it's starting to bend over here, or it's starting to roll over here. So what did I see on the larger time frame though that made me come to this final conclusion? Well, actually the larger time frame daily chart is it's still bullish at the moment. It's still bullish, structure's bullish. So you would technically be fighting the trend a bit. But there's a few things in here that I'm kind of eyeing. So I want you to note this. What we got right here. If you remember our talks on fair value gap, that is a draw on liquidity. See that bullish fair value gap that has not been tapped into quite yet, or it hasn't been tapped into at all. That's a bullish fair value gap, so that's going to serve as a draw on liquidity. Price is going to want to trade down into that imbalance and rebalance that portion of price action. And also, we just recently closed in a large bearish fair value gap right here, as you can see, completely rebalance that portion of price action. And on our lower time frames, it is starting to show signs that it may be rolling over here. Again, the 4-hour chart, we did have that strong move lower on the 4-hour chart right there. See that swing level, and then boom, that large move lower. There is and now we're tracing back up into that range right there. Let's go to a 1 hour here, because this is where it got really interesting. So on the 1 hour chart on ES right here, and I actually posted this in chat this morning as well in the free chat, this level, but we're coming up into this bullish order block right now. So look right there. See that leg up right there? See that leg up that my cursor's pointing at? That's all one order block. That's a bearish order block right there, okay? And I want you to notice that our smaller time frame fair value gap is inside a larger time frame fair value gap. So we got our order block, we got our 1 hour fair value gap right there. That was a really strong shift in market structure on the 1 hour chart. There was a lot of conviction, a lot of strength on that move lower. And then remember, we also have our draw on liquidity down here as well. So price is going to be drawn to trade down into that area. So even though technically the larger time frame is still bullish, we're having intraday signs that it's about to have a reversal here to the downside. It's given its indicators pointing towards that in that direction. So, and let's see what else we had. Yep, 15 minutes is basically the same story here. And then the 1 minute, you got your confirmation again. So you can see like it was grinding up. It came up, took out buy side, and then boom, we got our leg lower here. It had a shift in market structure with your imbalance created right there as well. So now we want to see price tab up into that. If it's able to do so, that could be a really nice shorting opportunity. And depending on how aggressive you want to be with it, because I mean, if you're like going short right here and you got your stop like right above that high, I mean, if you're really ballsy, yeah, you can hold down into that imbalance if you want. But I mean, that would be quite aggressive, okay? Quite aggressive. And considering the fact that the larger time frame is still bullish overall, that would be a little bit too aggressive for my liking. So what I would do personally is take 50% of that price range, like on this leg up right here. So I want you to take that leg up right there, and I want you to measure this price range real quick. Again, you can hold down there if you want to, but it's still kind of a bit early because you really don't got that full confirmation on your larger time frame quite yet. So knowing that fact, it would be probably a smarter decision to play it a little bit safer. I mean, you can milk out a lot, and I mean that the risk reward on something like that is absolutely incredible. But then look what we got here. So this is the importance of like utilizing different time frames. See that little 5 minute fair value gap? What is that? That's a draw on liquidity, just like that is. Just like you got that larger time frame fair value gap, this is that 5 minute, which is just a smaller time frame, or not 5 minute, 15 minute draw on liquidity as well. So really the smartest bet would be, now if I was to play this, again, I'm primarily a Forex trader. I don't hit futures, but I mean, price action, save signatures. And so I'm kind of like, this is just my thought process in real time right here, what I see happening. And if I was to play it, I personally wouldn't hold for that big objective like that. I would just look for like a little scalp like this, because even that is like beautiful risk reward. If you were to hit it up into that risk and high day, that's still beautiful risk reward. You're winning much more than you lose on it. So I mean, I wouldn't be too greedy with it, especially considering the fact that the larger time frame is still bullish overall. And there you go. So now we're popping up into that 1 minute bullish imbalance, and we just completely closed in that imbalance right there. See that? That's where you would go short. That's where you would go short, and you would be risking the high of this little price swing right here. Also the high of that 1 minute fair value gap. And personally, what would I shoot for if I was to hit this? Well, there's your equilibrium price point. But I would just play it safe and take it down into this little imbalance right here for a little scalp play. Because again, remember, technically you are counter trend trading with that daily, which is never ideal. But still, there's more pointing on these intraday time frames at the current moment to the downside than to the upside. So I think you're probably going to get a little something here pretty soon. We'll see if we can do it. But yep, I would play it safe and just take it down into that. So let's see if we can do it here. All right, there we go. ES has hit the PT area. Again, how did I get this PT area? And this is right here. So you can see we took out, or we traded down into this little imbalance that I had on the, well, not the 5 minute, the 15-minute chart. See this? And that's equilibrium of that little push up. So we had this push up right here. There's equilibrium. And then you get that little imbalance right here that it's now tapping into. That was our draw on liquidity beforehand. Again, remember when you have a fair value gap like that, a draw on liquidity like that, it doesn't like to leave an area like that untapped. And it's going to want to rebalance that price action. And that's exactly what it just did. And so again, one last time, why did I like this for a short play? Well, we already stated, let me just erase this and go over it one more time here, just to solidify it and make sure everybody completely understands. So I already stated the one thing that is not good about this is the fact that you are technically fighting the trend, since this is consistently grinding up on the daily chart, or the structure is still considered bullish. Now, it did recently rebalance this portion of price action right here. So you can see this bearish fair value gap on the daily chart. We already completely filled in that portion right there. So rebalance that. And also something else is we have this drawn liquidity right here. Again, drawn liquidity doesn't technically mean PT. We just know that price is going to be drawn to trade down into that area. Okay, so we got that. And let's see, what else did we have? And then on the 1 hour chart, we had that really strong shift in structure this morning. So let me note New York opening price. All right, just got the last couple days marked. So that's the opening price this morning. And you can see price had this little Judas swing higher, and then boom, we got a really strong move lower, strong shift in structure, which created our fair value gap right there. And again, I also posted this in my free chat. So let me, just so you know, I'm not just talking. So you see right here, I said starting to show signs of weakness. So I have that blue line. If you look at this chart that I posted here, and so I'll mark that. That's what we call a bearish order block. That's all one order block right there. And then we had that fair value gap that was created. So we traded back up. We had a really hard sell off this morning, and then it traded back up and it rebalanced that portion of price action, as you can see. So we filled in that fair value gap. We came up and tested our bearish order block as well. Now again, the larger time frame still is bullish, but we do have signs on the lower time frame that it's starting to look weak, that it's starting to show some blood here. It's starting to roll over. And then and knowing, like I've stated, knowing that the larger time frame is still technically bullish, that means it would be smart to play it safe. Okay, I wouldn't go looking for like some home run like that, looking for it to trade all the way back down into this imbalance. And because, I mean, you could, and it's incredible, absolutely fantastic risk reward on something like that, but that's quite aggressive, especially because you are technically counter trend trading. But I had a few things here that kind of gave me conviction that this was going to sell off. Again, measured this range right here on that bounce. See this? So we got that little move up right there. What I did was, again, I marked equilibrium price point, found that. Okay. And we also marked this. This was the PT, was this fair value gap that was right above equilibrium. See that? That was our draw on liquidity. The beginning of that would have been the PT. The very beginning, as soon as it tapped down into it. And then we had our lower time frame. Also, you had this fair value gap right here, which I guess is worth noting as well. Inside of that 1 hour fair value gap, see that? It completely balanced that portion of price action right there. And then on the 1 minute is where we had that confirmation. Let me go ahead and just remove this 1 hour and that that 15 minute just for so we can see the 1 minute a little bit cleaner. But you get the gist. That was the 1 hour, and then we had those larger time frame fair value gaps. So this is where we had that confirmation. Again, this is our draw on liquidity. This is our PT, and you also have the swing level right here. So we got sell stops that it targeted, and we got our confirmation. So there wasn't any major news today. There wasn't any major news today or nothing like that. And this wasn't a super strong shift, but still, combining that with the fact that we had our larger time frame level, or in this case, that 1 hour fair value gap, that 1 hour order block, we aren't just like grabbing any random shift in structure. You don't want to do that. You want to have a higher time frame point of interest. So in this case was the 4 hour or the 1 hour. And then we had a smaller time frame shift in structure off of that higher time frame point of interest. So you see, like right here, there it is. There's that shift. There's your swing low. It broke that swing low, created your imbalance. Price traded lower, but we don't want to just grab this as it's coming lower like this. We want to get the best entry. We want to minimize our risk, okay? And when price is trading lower like this, it's in a short-term 1 minute discount. And if we're shorting, we want it to be in a premium. Premium means expensive, discount means cheap. This is in a 1 minute discount. So we want to wait for that retracement back up into a premium, so above 50%. Did we get it? We sure did. So there's 50%. As soon as it like traded into 50%, it was also tapping into that fair value gap, literally to the penny. Right there, that's where you would have got your entry, risking right above the high. Traded up, it completely rebalanced that portion of price action, chopped around, and then boom, you got your move down into PT. So hopefully you guys found that. Oh, actually, let's go over the Forex as well. All right, so the Forex was a scalp this morning, Euro CHF. You can see right here, I posted it in the free Discord as well, scalp play, and then I posted Euro GBP, take out these lows right here. But Euro CHF was the one I hit this morning in Forex. Again, this was a break-even trade. So it was a break-even trade. You can see. So what was my reasoning on this? So daily chart, daily structure is clearly bullish. This is trending to the upside pretty strongly right now. We also got this draw on liquidity down here that is probably looks like it's about to tap into. Now, what did I see this morning? Okay, this morning I noticed that we traded down into a discount market on the 4 hour chart. So if we take this low to this high, this morning we traded down into a discount. Okay, now this is my one thing I didn't like about it was the fact that the 1 hour was bearish and it was operating within a bearish market structure at the time that I hit it. And that's the reason why I went was just like a little scalp play. I wasn't looking for some home run or some swing on it. It was just a scalp play. I thought it would give a little more. We had this draw on liquidity up here. So let me go to the 15 minutes since I believe that's where I marked it. Yep. So in the 15 minute, I had this right here. See this little fair value gap? I wanted to see a tap up into that. That's exactly what I wanted. That was the draw on liquidity. We recently just took out low of day. So again, the structure was bearish, but we were trading down into a discount marketplace still. So I figured we could get a little retracement back up within this range right here with this draw on liquidity being here. And also we had this 50 institutional price level right here. So if you've watched my series on support and resistance, you know what I mean when I say institutional price levels. We have the 0, the 20, 50, 80 institutional price levels. So we got 50 right here. Discount took out that low. And also it was tapping down into a fair value gap. I believe a 1 hour fair value gap to be exact down there as well. Yep, exactly. 1 hour order block as well. So, I mean, it was still a pretty nice looking scalp play. And price just basically what ended up happening was it just ended up chopping. And you can see came down and it felt like I don't like using anything lower than the 15 minute in Forex. Now, ES on the other hand, like when I trade or not trade, whenever I look at like futures, the 1 minute's pretty clean on them, I gotta say. Compared to Forex, I mean, sure, price is price. It's the same signatures, but I gotta say when you go to like these lower time frames like in Forex, it's a little bit more noisy. There's definitely a little bit more choppiness, manipulation than you would see with like ES. So I really don't like going lower than a 15-minute, but here's what happened. We had this little push up off of that imbalance. I liked seeing that. I like seeing that. That was confirmation. We had that fair value gap as well. And if you were to use a lower time frame, you can see it completely filled all these imbalances on the lower time frame as well. It completely rebalanced that portion of price action on that impulse move higher. But then what happened after it did that? It just chopped and chopped and chopped and chopped, and I just eventually got tired of it and ended up getting out break even. Because as I said, like I posted the other day on Twitter, if you guys follow me on Twitter, link in the description, I said, indecision is my cue to look for the door. Let me say that again. Indecision is my cue to look for the door. If you got a really solid level and you're correct on the play, there's no reason for it to be chopping around if you really think about that. If you're really correct on the play, you got it right, there's no reason it should be chopping around like this. This tells me indecision. It doesn't know which way to go. And indecision, that's my cue to go. That's my cue to look for the door, get out of there. Okay, it ain't worth holding it. The best plays, very best plays, they usually touch those levels. And you'll notice this I believe if you really study your own trading, you'll notice this as well. The best trades, they usually touch your levels and they're out of there. They don't spend a lot of time. They usually hit PTs pretty quick. Something like this is just, it's not a signature for my winning trades. This is not the type of price action that my winning trades has. It's not the criteria. So I said, hey, let me just cut it. And I'm glad I did, because it did end up rolling over shortly after I bailed. So it was definitely, for Forex, it was a slow week for my strategy specifically. I didn't really get hardly anything, but I will say from my observations in futures, I mean, just really clean trades in there. I don't trade futures personally at the moment, but the price action is very clean, with like, it's much cleaner on like the lower time frames in compared to Forex. Again, Forex, I don't think I'll ever, I mean, don't quote me on this, but I don't think I'll ever go below a 15-minute on Forex. It's just too noisy for me personally. But something like futures, like ES, or maybe, I haven't looked at NASDAQ, but I'm sure it's like the same. It's just super clean, and it's just not as noisy. But yeah, hopefully y'all found this, or you got some use out of this. If you did, leave a like, subscribe to the channel, and I'll catch you later.